What's up everybody, Nate here. And obviously over the last couple of months and even last couple of years, we have seen a complete flip of our entire economy. Inflation has recently reached an over 40-year high. The stock market recently deleted all of its gains that it's gotten over the last couple of years. And other markets like the housing market and the cryptocurrency market all have started to fall. Now there is talks of a big global-wide recession and possible depression around the corner. So the big question is, what exactly can you do to prepare, and how exactly can you win in this economy? Well, that is exactly what we're going to talk about today. And I'm going to show you that while things look bleak right now, this may actually be a really big opportunity for those with the right mindset. So how exactly am I preparing for a potential recession and depression into 2023? Well, I am doing three major things with my money right now. The first thing that I'm doing is working on saving. Now, saving is a really important aspect of your life and something that is going to mean the difference between you being financially successful and you running into a financial disaster that causes you to become a whole lot poorer. This problem though only gets worse when you're in a really tight economy like a recession. So this is the first thing that I'm doing because this is my absolute baseline for the entire rest of my finances. A savings account is kind of like your barrier between you and a disaster. I use a savings account to kind of build up for something like an emergency or for something that I want. That way, if something kind of strikes in my life, I don't have to put it on credit. I don't have to put it on a loan. I can actually pay for it myself. So I am building a savings account that is going to protect me against something that might happen next year. Like if I was to lose my job, or if something major happened, like my roof caved in or my car broke down. I need to have something to protect myself because when money is really tight, I can't afford to get further in debt. So how exactly am I doing that? Well, I'm using something called the 50-30-20 budget plan. And basically what that means is 50% of every dollar that I earn goes towards spending. And this is for needs and wants. So 50% of all of my money goes towards spending. And then 30% goes towards investing and the other 20% goes towards saving. I take 20% of every dollar that I earn and I put it in a savings account until I hit a number that I'm really comfortable with. Like I said, I use a savings account to protect myself. I use it in case disaster strikes in my life because I don't know when that's going to happen. And the reality is, well, there's going to be disasters in life. There just is. And I need to be financially prepared for that at some point by saving whatever I can. So this is a really easy way to do it because now you're giving every single dollar and every single cent that you earn a job within your budget. Like I said, 50% towards spending, 30% towards investing, and 20% towards saving. Now, this is a baseline for your entire finances, and it's going to be important into 2023 because we don't know what's coming next. We could see a lot of job loss. We could see the stock market tank even further. We could see a lot of people end up losing a ton of money and losing their homes. So you and I both need to be very prepared, and you do that by saving your money now when things are all right and when things are good. Now, I don't recommend saving forever. You should not save your money forever. I only save around 6 months to around 8 months worth of a savings fund. That way, if I was to lose my job, if something bad was to happen in our economy, like a really deep and long recession, that would mean that I'm protected and I can pay all of my bills for 6 to 8 months. I start by saving around $2,000. This is going to protect me against most of life's little inconveniences, like if my window breaks, if I have a small problem with my tire, something like that. It's going to cost me around $1,000 to maybe $3,000, right? So I start right there. Then I look at all of my bills and I try to figure out how much I need to save to protect myself for 1 month, and then to protect myself for 2 months, and how to protect myself for 3 months. I add up all of my monthly expenses, and that's how much I need to save multiplied by how many months I want to protect myself by. So that kind of creates my base, right? It is my financial floor. If anything else in my financial journey starts to fall down, it is protected by that savings net. Next, I move on to number 2. Now, this has everything to do with money management. This is how I actually handle the spending portion of my budget. In 2023, there's going to be a lot of uncertainty, and I think for me, I just have to be a little bit more thoughtful on how I spend every single dollar because I don't exactly know what's coming next. I don't know if we're going to have a really big recession, and I don't know if there's going to be job loss or how much things are going to cost next year. So That means I just have to be a little bit more thoughtful about what I'm buying and how I'm buying it. I don't plan on financing anything in 2023. I plan on either buying it out of pocket or surviving without it. I can't afford to get into debt right now because the Federal Reserve is raising its interest rates, which means I'm going to be paying a whole lot more for that debt next year, and that is going to hurt my financial journey and my wealth building chances down the road, because now I'm paying more money to the bank or to some corporation just because I didn't have the money to buy it in the first place. So I am avoiding financing in that way. And I'm also avoiding just overspending in general, because it's really easy to do, especially when times are great and you're making a lot of money. Maybe this week you spend 60% of your money, right? Maybe next week it becomes 70%. So you just have to be really careful that you're not overspending and that you're really staying diligent with your money. That all comes down to money management, and you have to learn how to manage your money now if you want to benefit from having money in the future. Because I can guarantee you that if you don't know how to manage $100, then you're not going to be able to manage $100,000. So it won't matter how much money I make in the future. It won't matter what I do if my budget and my money management is not strong today, and it needs to be stronger than ever when times are good, so that way I can benefit from opportunities when times are bad. So I have to be able to be really diligent with every single dollar that I spend, and I have to look at every situation that involves money and figure out, well, do I need this or do I just want it? And the last thing that I'm doing to kind of prepare myself for a possible recession in 2023 is invest my money. Now you're probably thinking, well, Nate, the stock market and the cryptocurrency market and the real estate market are all starting to fall now in the United States. So why exactly would I invest my money? Well, the reason that you invest is because a lot of these prices are going down and are going down at a fast rate. However, you have to be in the long-term mindset here in order for this investing plan to work, because if you just invest $1,000 today and try to sell tomorrow, then you're probably going to be out hundreds of dollars. However, if you invest $1,000 and hold on to that $1,000 for 5 years or 10 years, you might end up having $15,000 to $20,000. So it really just depends on how long you want to be in investing for. I personally have a long-term mindset, so I invest for the future. I invest for future generations. I want to build something that is sustainable for a very long time, and one of the easiest ways for me to do that is to dollar cost average my money in the stock market or in real estate or in cryptocurrencies. Yes, I say cryptocurrencies because even though the crypto market has gone down right now, I firmly believe that it is going to be something big in the future. So I do invest a small portion of my portfolio in cryptocurrencies. Now for me, the vast majority of my money goes into real estate and stocks. And like I said, I dollar cost average, which just basically means I put in the same amount of money no matter what the market looks like. So if I decide that I'm going to invest $100 every second Wednesday of the month, that means I do so and I get a certain amount of shares in a company. And sometimes those shares might be a whole lot more or a whole lot less. But the idea is that I save money over time, and sometimes I get more shares and sometimes I get less shares, but I'm not overspending to get a certain amount of shares. Because if you go in saying, well, I'm going to buy 5 shares in X company, then that is going to be a different number every single week. So dollar cost averaging allows you to get an average cost of those shares over time, and it saves you a lot of money and headache. My strategy is very passive. I just use this method. I just put money in, and these shares are bought for me automatically, whether it's in ETFs or whether it's in specific companies or specific real estate deals. I don't really have to do anything else, and that is the point here. That is how easy it is to kind of get ahead in this economy because of stock brokerage apps that are completely free and financial education online. You're able to learn and gather all this information, again, completely for free. But like I said though, as these markets go down, you're now buying at the bottom, and traditionally the stock market and the real estate market and the commodities market, even though they have had their dips and their rises in our economy, they always go back up. If you're looking at the stock market right now and thinking, well, the stock market looks pretty bad, zoom out a bit. you have to zoom out and kind of look at, well, what has it looked like over the past 30 and 40 years? If you look at the Dow average, for instance, it has exploded from just a few thousand points to now well over 30,000 points since around the 1980s. So just over that time, people that would have put in $1,000 have now completely maximized and gotten hundreds of thousands of dollars. So it really just takes a lot of time, and that's why I plan on being a long-term investor. In 2023, for me, there's going to be an opportunity because I believe that stocks are going to go down, and I believe that commodities are also going to get a little bit lower because our economy is slowing down. The Federal Reserve is raising their interest rates, making it harder for everybody to spend money, businesses and consumers included, and consumers and Americans just aren't going to be spending as much because of things like inflation, meaning everything is getting smaller and everything is getting a little bit more restricted. So that means everything is shrinking. And for me, this is a really good time to buy because now I know that I'm getting in at a really good price, and traditionally the market goes right back up. So I'm getting really, really good assets at a discount. Now I can hold on to them and buy even more shares with my dollar cost averaging model next year, which builds my wealth and builds the amount of money that I have to use in the future. This is exactly why they say more millionaires are built during recessions than times when we don't have one. This is exactly why they say more millionaires are built during recessions than any other time in American history. The ones that know how to use their money and the ones that see this as an opportunity and don't get scared are the ones that end up benefiting from it. And that is exactly what I want for you, and that is exactly what I will be doing next year. Like I said, I'm not gonna lie to you, my portfolio is probably going to look bad in 2023. I'm probably gonna have a lot of L's on the board, but at the end of the day, 5 years from now, I won't even be thinking about what happened in 2023. I'll be thinking about what's going to happen in 2035. So I have that long-term mindset. So again, you need to kind of build that savings as a baseline, and then you need to kind of be thoughtful and manage your money in 2023 so that way you know where every single dollar is going and you can capitalize on every situation. And then after that, go into investing and start investing your money diligently over time. You're then using all of your money to build even more money, and you're using a recession as an opportunity to protect yourself. That way you don't have to worry about a possible recession in the future. You have control over your finances, which means you can eventually get out of the rat race and start building wealth and start having a little bit more financial freedom to create that generational wealth, which can stay around for a really, really long time and not just protect you, but your family. That's exactly what I want for the future of my family. So when I'm gone, they are set for life. I want to build something today that lasts generations. So there is a lot of negativity out there with our country going down, and I'm not saying our country is perfect right now, but what I am saying is that there is opportunity out there. This could be turned into a positive situation for you if you have the right mindset. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.